This is the biggest crash that Bitcoin has experienced throughout this entire bull market cycle, obviously leading many to question whether the bull market is still on. We've seen some pretty decent developments through the price on Bitcoin over the last 24 hours. So I've got some good news for you, and also dispelling some of the myths around another deep, dark recession beginning to unwind thanks to Japan and the Japanese yen. Don't go anywhere. This is your home of macro cycle analysis with me, Jason Pizzino. We're covering Bitcoin, cryptos, the stock markets, and the real estate cycle today. Plus, the biggest spike in the VIX since C19 back in 2020. Don't go anywhere. Links in the top of the video description for our free crypto and economic report coming out today. Get your hands on that. I'm going to kick it off with a little data and some of the market sentiment, and then get straight into those charts. So enough said here. Nice recap of the correction for the NASDAQ. The NASDAQ composite has dropped more than 10% from its peak after having been at record highs. You know the deal, looking at the data, looking at the charts, reviewing history here. Let's just skip straight to the results. NASDAQ composite, after cycling from a 3-year high to a negative 10%, so negative 10% drawdown. What does this look like going forward 6 and 12 months? In the short term, anyone's guess. I don't want to try and play that game. I'm here for the longer term, 6 to 12 months. What does that look like? 75% hit rate that the price of the NASDAQ is going to be higher in 6 months' time than it is now. And in 12 months' time, 78% chance. So roughly 7 or 8 out of 10 times, the NASDAQ is going to be higher than the current prices. The average max gain, about 25% over the next 12 months. And the median is about 19%. You do what you want with that data. So far over the last couple of years, as we've been going through each of these pieces of data, every single time the market gets quite fearful, it's worked out. Eventually it won't, but that's the idea about probabilities. You've got to stack the probabilities on your side. Hopefully you're able to get into some of those significant dips yourself. So that's definitely some good news for Bitcoin, cryptos, and the rest of the market. Many were fearing that the 18.6-year cycle is over. And I heard this throughout 2022. I heard it on the dips in 2023. I heard it in 2020. I heard it in 2021. And I think it's going to get even worse as the cycle continues on, as we continue up later this year. Remember, this is that period in the market where things get very volatile, things are fearful, a lot of extreme fear coming out for the S&P 500 over the last 24 hours. Check out the timeline here, dropping straight down into extreme fear at 19 after just being in neutral a week ago. And so as we head into this final stages of the peak, I'm still seeing more upside for the markets. There have to be corrections along the way. And typically, these corrections get more violent. And with more violence, meaning severe price corrections, with more violence comes more emotions. We 100% saw that yesterday. The emotions were absolutely wild across the stock market, across economic analysts and talking heads, and of course, Bitcoin as well. Huge fear flowing into the market. Bitcoin, massive fear flowing in here. Extreme fear. It has now been hit. We're at fear just yesterday and now at extreme fear. What does this look like longer term? Bam. That's pretty much the territory that you'd want to see the market get to. Maybe it churns around here for a period of time. You can see this is about a month or so. Then again, in May and June before finally getting out of it in July. That was 2021. Another recap here was a quick dip in January after the peak, and then also at or near those cycle lows in 2022. So this was around May and June of the DeFi collapse and the CeFi collapse before we had the FTX collapse, which was a higher low for the fear of greed index. So I'm not saying that we're completely out of this and it's going to skyrocket again. We did see it drop to fear, bounce out, and then crash back down. The main thing I'm looking at here are the extreme volatile emotions of the market whenever you do see these fear readings come out. Extreme emotions with Bitcoin and crypto, extreme emotions within the stock markets, and of course, people relating the economy to the stock market. How did that happen? Here is the beginning of my list, adding it to the wall of worry, the bull market wall of worry. Little spelling error there. Okay, so these are the first things. Fears of US recession resurfacing again. You name the number of times this has happened over the last several years, most notably throughout 2023 when the stock market went up, when Bitcoin went up, when real estate went up, when all of the stock markets around the world were going up, when other assets and collectibles were going up. Everyone was calling for this recession. It's resurfacing again, and they're trying to tell us that the markets are unwinding, that the economy is now unwinding. You typically hear these things at or around very, very significant lows. We've seen the SARM recession indicator flashing. We're also hearing cost of living crisis worsening again. I mean, that one goes on every single day. Iran at war. I saw that in the live stream yesterday. People talking about Iran and something else going on over there. I think one of the Hamas leaders were killed, and that's obviously sparked outrage. Stock markets crashing. Well, obviously the the Japanese market has also fallen. Bull market over, listing many of these things in their articles. US unemployment rising. The list goes on. This is just the list that I could think of, and you guys have added to this list as well. You've got the Japanese yen collapsing last month, Japanese yen rising now, US dollar falling, which we'll get to today. Anticipation of Fed emergency meeting that also came out yesterday. Japanese interest rate rise happened last week. Japanese stock market crashing. Japanese selling US tech stocks for funds to pay back loans on yen after the BOJ interest rate rise. Everything bad that you could think of was out yesterday, which of course, I guess in a kind of logical, emotional sense of mind, would make you think that the bull market is over. I personally don't see that happening yet. I think it's coming, but we still haven't seen a peak form on extreme greed for the stock markets and for real estate. I'm not referring to Bitcoin because Bitcoin is such a small asset class. I'm talking the broader sense here. I don't know how many times that question comes up where they think the 18-year cycle is over because Bitcoin went down. There's over $300 trillion in real estate. Bitcoin is barely 1.5 trillion, 1.2 trillion. Okay, so forget the comparison there. Bitcoin will go up with everything else, and we haven't seen the end yet. So, what happened with this? The emergency meeting, and why the Fed almost certainly isn't going to do an emergency rate cut. I guess in the next 24 hours, we shall learn more about that. And of course, the next meeting is coming up in September, but it doesn't seem like the Fed, or at least the newspaper headlines, and we all know how much we should believe those. But just looking at the wording here, there's nothing in the Fed's mandate that's about making sure the stock market is comfortable. That's an interesting one to take note of. Preferably, personally, I prefer just to focus on the price action. So, stock market down total of 10.5%, having a small bounce here in pre or post market action. You can see it got below that low of May and then closed above it. There is still support back at the 50% level, 4,900, and the previous all-time high, which is this white line, 4,800. So plenty of support to the downside. One of the more significant corrections in the run up here. And looking at timeframes going back throughout history, note last year, this is peak in July, drop into August, run up in September, another drop into October, and then the market ran away from there. So we could go back over many, many years. We can go to 2022. This is June. This is August. Market fell September, October, another drop into October. Back last year, I did go through this in great detail, and 2022, just looking at how many bottoms form in the market around that October period. So not to recap that data too much, we'll continue to focus on that should this fall continue to develop over the next 1 to 2 months. Maybe you've got some sort of rally going on here after such a significantly emotional day yesterday, which would only be natural to see some sort of bounce. We'll see whether this is the low or whether it essentially just fades out again and you get a final low as well. Just a quick recap for my Aussies watching. You've got the cash rate coming up. 4.35% is the cash rate here. Inflation is at 3.8%. It seems unlikely that you're going to see a rate cut in Australia with inflation at that high. And the US is at 5.5% interest rate with underlying inflation at 2.3, but I know many people believe that number is a lot higher. So like we've heard from the Fed, it's probably unlikely you would see any sort of significant rate cuts. Maybe you're going to see 1 or 2 over the coming 6 to 12 months. And yes, I have changed my tune slightly from what I talked about 7 months ago. People expect me to keep my opinion for 7 months when it comes to the interest rates and me talking about the US and the Fed. I said in January there wasn't going to be any cuts, and the vast majority of people believe there will be cuts. Of course, we haven't seen any cuts, but things of course do change. However, it doesn't seem like it's going to be anything significant if in fact there was going to be some sort of cuts. The Nasdaq also followed suit with a very significant sell-off, low to high for our 50% level. Should this be a significant low, you're looking for a close above 19,200 points to form some sort of baseline for the bull market to recover there. Otherwise, we'll have to keep adjusting our 50% to wherever the next low point comes in. The good news is it's still well and truly above the 50% level at 15,700 and the previous old all-time high at roughly 16,700 points. The correction on the Nasdaq top to the bottom now is at 17%. So quite a significant correction here. And like we looked at the data in the intro, typically the short term, maybe there's going to be slightly lower prices, but looking longer term, a 17% correction is usually a pretty good entry point when you go back over history in terms of corrections for buy the dip opportunities for the Nasdaq. The US dollar doesn't seem like it's on the path of a buy the dip opportunity. That's if you are looking longer term with the US dollar. It's broken down from our weakness level. It's broken down from the 50% level, slicing through it, which is a fantastic sign that the weakness on the USD is going to continue, at least in the medium term. Maybe you've got a bounce here in the short term because of the significant volume coming in as it broke down. So look towards 103.3 for a sign of rejection. If it can get back above it, well then we've got a little longer here with the US dollar basing out before it decides which way it's going to go next. Now for the VIX, the big talking point today as it has bounced out of our bull market support zone 11 through to 17 on the reading down here. This happens throughout bull markets. Doesn't have to stay in here for the entirety of the bull market. It can bounce out, and you can see here spike out and then basically find its way back into the bull market zone. We go back to previous corrections for the stock market. Let's go S&P 500. You can go back to 2015 and 2018, some significant times through the bull market. That's 2015. It looks like barely anything when you reflect on where we've come from, and this is 2018. But I do remember those times. 2015 was right before the 2016 election. Things were quite tough out there, but the market recovered from that point. And also 2018. What does that look like on the VIX? There's 2015, pretty significant spikes here to 53. You've also got a 2014 there at 30, and you've got 2018 there at roughly 50 again before it finds its way back into the bull market and things carry on. So what does this mean longer term? It seems like we've got ourselves a low or around a low, because note that in 2022, the VIX went higher in these cases, and then you finally found your 2022 low. So the volatility is increased a lot because of how stable the market has been leading up to this point. So the volatility has been very, very low. So any sort of correction spikes this chart. So this was yesterday. This is C19. The price of the S&P can continue to go slightly lower, but the VIX might put in a lower high, as it has done throughout 2022 was basically that time. So here it is there. You could basically line up each of these points here with significant lows in the market. This is your banking crisis. This is the October low. Check that out there. Pretty much non-existent on the VIX. You also had the low back in April. There's another spike. And basically I could spend another half an hour on this video going back through every single spike in the stock market and marry those up to the spikes in the VIX. I don't think you want to see that on a video right now. The stocks themselves, the US stocks, bounced, in this case, Nvidia, off its 50% level. So Nvidia is showing some signs of strength above the 50% level. That's going for Apple as well, above the 50%, above the previous old all-time highs. Microsoft also doing similar things here, hit the 50% and also double bottomed at these lows. It's not to say that it's over yet, so I have to keep watching this one over the coming weeks. And of course, that's what we'll do when it comes to the NASDAQ. On to Bitcoin and cryptos. $1 billion of wreckage overnight, 24 hours, 800 million for the longs and 300 million for the shorts. This is a great sign now for a reset in the market. Basically, a lot of the leverage getting flushed out of the market. Those last several days had some pretty decent volume. And then yesterday was a solid one there, 800 million, totaling 1.1 billion. The last time we saw these was that low in April, so a significant low that I've referenced for altcoins to try and locate the strong versus the weak altcoins. Also, there was the drop in March before we went to that new all-time high. So pretty significant timing here for the leverage to get liquidated at a possible low in the market. This is what I put up yesterday, and the idea here was that the price needed to bounce above 53.5 and get a daily close there for the beginning of a possible move out of this fearful time. And was Bitcoin able to deliver? It sure did. It closed at $54,000, so $500 above that low. Over the last 7 days, 30% correction, $20,900 correction. So call it a $21,000 correction. And now we're seeing prices head back towards 56K. So that could be the start of a nice base forming, or at least a V-shape, or the best case scenario is a V-shaped recovery from here. If not, and we start to see it grind out again, it would remind me of times like this here, back in August and September of 2023, big drop down, tried to recover, and then it came back to test those lows. And more closely would be that FTX collapse. Big collapse here. The market bounced and then died off into that low that went slightly lower, but the fear didn't go lower. And then we had higher lows form, another test, and then the market took off. That entire process took around 2 months. It might take 2 months this time, maybe it takes 6 weeks. Remember, what we've been looking at since March was the correction from this high, our 4 to 6 months below the all-time high. This is roughly around September. So if we've got another month and a half left to climb back above and get to new all-time high prices, or at the very least, get back into the strong half of the 50% level, that would be coming out at $61,400 now, with this current low at $49,000. So there is some good news to everything here, at least on the daily basis. And the next thing to look at is, of course, the weekly. We've got 6 days to go now for the weekly. The close I'm looking for is still above 53.5, ideally above 56.5 by the end of the week for more strength. And should we get some sort of godsend V-shaped recovery, the best case would be 61,400 or our 59.5, because this is the entire range here. So 53.5, 56.5, 59.5, and best case scenario would be 61.5. Now, Ethereum has disappointed time after time after time in this bull market. It closed just under its 50% level, needed to get above 24.90, managed to close at 24.20. Today, it's aiming to get above that. Ideally, needs to get a very quick close above $2,500, and then back to these lows where it broke down from. So that's at 28.5, call it around $2,900. That is going to be a key level for ETH to confirm its strength and to confirm some sort of increased growth against BTC throughout the rest of this cycle. It's basically been underperforming throughout this entire period when you go to your ETH BTC chart, basically continuing down, getting rejected time after time. The good news, we all need to have some sort of good news here, some sort of hopium. You got the diagonal downtrend from the peak in September, and it came back to test it and closed above that, and just so barely closed above the previous low in May. There's the line through the bottom there, 4470. It came out and closed at 448. So it managed to hang on there ever so slightly against the Bitcoin value, which means that it has the potential to continue to consolidate, but overall, it's basically been underperforming. Now, it could come back, and I think many of us are hoping that it does. The signs there, it still needs to get back above the halfway point, 5.2, then these previous tops at roughly 5.8 to 6%. So anything under 6% is still looking relatively weak, which shows up on the Solana versus ETH chart as well. So we take a look at that. You can see that the downtrend here is showing signs of strength to Solana, as opposed to if it goes up, then there's signs of strength to Ethereum. So let's take a look at Sol, and the strength here on some of these altcoins has been absolutely rocketing away. This is Sol versus Bitcoin. It's still put in higher lows from that April low. So I put out a tweet here back in April saying strong altcoins are putting in higher lows, and here is one of those. Sol versus BTC put in the higher low in April, put in another higher low in June, potentially putting another higher low yesterday in August. For some reason, people love this thing and want to keep buying it, as I do myself. That's Sol BTC. What does it look like against USD? Well, here it is, $140 after getting down to 110, ever so barely holding in for the 109. There's the 50% level. It just held in there, huge volume, nice bounce here, and the close was just under the next 50% level, but for now it's trying to push back towards 140. This doesn't mean that it is going up and it's never going to come back and revisit this level. The next 50% to overcome is around that 152 level, just for this entire move to the downside, as that stemmed from 194 down to 109. So an $84 drop, 43% in the last week. So Solana still has some work to do to prove that it has the strength to continue on with this pretty decent run throughout this entire bull market. Otherwise, it's at risk of getting rejected at 152 and coming back to test some of these levels at 110 to 130. So far, so good. So keep this one on your strong altcoin watch list. Overall, total cryptocurrency market cap has bounced for now at around 300 billion. So that was one of the final areas of support for the total cryptocurrency market cap as we're watching it throughout this decline. That reason there, highs are at 260, roughly to around 280, so call it a nice round number at about 300. Anything under this particular zone for the total crypto market cap, excluding stablecoins as well, would be pretty dire signs for the overall market cap. Now, of course, this one's getting held up a lot by the top 10, so you could check out the top 10 for some of those stronger altcoins, Solana being one of those. Next levels overhead for the total cryptocurrency market cap are about 480 billion, again for signs of strength, if you want to play that safer game and wait for confirmation strength in the overall market. Otherwise, this could be another rally that comes up and then gets rejected. Basically, a dead cat bounce. The dead cat bounce area to watch is around 411 billion. Top to bottom, you get a rejection around that 380 to 410 billion. That could be on for another decline. So as I'm filming, Bitcoin's hitting $56,000. I've had a lot of good news for you guys in today's video. Make sure you hit that like and subscribe to the channel if you're new here. Share it with a friend. Let them know about how the cycles are progressing, and then it's possible that we aren't in all of this doomsday nonsense jargon that goes on day in, day out in the markets. This might be one of those great opportunities again before our trend reversal signal finally plays out and we get to a new fresh high price. And I still think that could potentially be later this year, around that Q4. Free economic report is coming out today, crypto and economic report, link in the top of the video description. Otherwise, I'll see you back here for another update very soon. Till then, take care and peace out.